Hi everyone, Kip Harrods here with Vertical Research Advisory. Hope you're all doing well. Wanted to get out a quick video to give a market update. We're in a bear market, and it's brought a lot of questions in from our subscribers and from our clients. We wanted to address some of those for you. And also, we have a new launch of Parabolic Options Program number 60, and I'll cover that at the end. But first, let's talk about this bear market. Let's talk about how we're handling it. How we think people should be positioned, what the opportunities are, because there will be massive bear market rallies coming up, folks. We actually think there's one's about to start right now. But real quick, for those that don't know me, again, my name is Kip Harrods with Vertical Research. I spent 15 years on Wall Street, beginning in 1985. I've now been in the business, 36 years. And from Wall Street, I managed money for high net worth individuals and the companies that they started. Helped take 7 companies public, took 3 companies public during the dot-com melt up from 95 to 2000. And anyway, retired from the business at the age of 38 and started the VRA in 2003. And so we've had this now going to starting 20 years. And what's really cool about it is that in addition to me and the staff we have here, about 4 or 5 years ago, Tyler, our oldest son, started. He's now a partner in the VRA, and really, he's a research aficionado, and he's also a jack of all. He wears about 9 different hats every day here. So we've got a great team together. It's pretty cool being a 5th and 6th generation Texan with your son and being able to do this. I must say, it's really every father's dream come true. But again, where we are now is this is a classic bear market. Okay. This is a classic bear market. In the VRA, since we started the VRA in 2003, we've had a good run. We've beaten the markets 16 out of 19 years. We're up pretty substantially on the markets this year because we use the VRA investing system. And this is something that I've developed over my 36 years in the business to make sure we're positioned the right way. And so we have removed a lot of positions from the portfolio. We're now hedged in the portfolio. But this looks to be a classic bear market, which is different than what we've had recently. Since I've been in the business, I've had a number of bear markets, but most of them have been very quick ones. For example, the first was 1987. Remember Black Monday? I've been in the business 2 years when that happened, okay? That was really a one-day event. After that, we had during the dot-com melt-up, and not many people talk about this anymore, but I think it's significant based on what you'll see me walk you through this in a minute, because I think what we're going through now is going to be very similar to what we had in the dot-com melt-up. In 1998, with just about the final 2 years of the dot-com melt-up, we had a bear market, a brutal bear market of 32% that took place over 4 or 5 months. And it shook so many people out of the markets, okay? And most people did not participate in the final melt-up of dot-com. The NASDAQ rose a ridiculous amount, like 200% in the last 2 years. It was just melt-up. But most people had been shaken out because of the bear market that just happened. I think that's similar to what we're going through right now. And I'll explain that more in just a moment. And then look, we had obviously 9/11 happened. That was the fast and painful, brutal, and then produced a good bottom. Then we had the big run up to the financial crisis. Of course, that produced the real bear market that could have turned into a depression. But then the Fed started quantitative easing. That started our experimentation with this Frankenstein we have now of QE, which now, of course, has reached ridiculous levels of better than $9 trillion. But we also had more. We had, and if you remember 2018, when Trump was been in office a couple of years, the Federal Reserve started tightening, right? 8 straight rate hikes when Trump became president. That caused the markets to crash in the fourth quarter of 2018. That produced a brutal sell-off, right? The worst Christmas since the Great Depression. Market crashed on Christmas Eve. And then what do we have? Rona, the pandemic. 2020 sell-off, 37% sell-off in the S&P 500 that took place in 5 weeks. So, yeah, I've been through a few of these. You've been through a few of these, okay? This could take on any shape or form because, look, here's the problem. We have a real problem here that we haven't had before. And I don't mean to get political with this, but, this ties in. It just does. It ties in. It's frightening how much politics, geopolitics, and investing and the markets and the economy all factors in together right now, which is why we track all of that. That's why you do as well. We have a president, Team Biden will say, because I don't believe this guy runs anything, but this organization is practicing intentional destruction. We've been talking about this now for a couple of years when the pandemic began, because we didn't buy into it right from Jump Street. It was something very fishy about the entire thing, and now we know why, because the whole thing was a pandemic. And now, with Klaus Schwab, the World Economic Forum, what they're doing to the markets here looks very much to be intentional destruction. If that's what their game plan is here, to take this economy down, to do it so that in this style of communism, when you destroy the economy, it makes the people desperate and dependent on the government, and then communism wins. If that's what their game plan is, folks, we got to be on our toes, because the midterms are still 6 months away from when I'm recording this right now. I don't think that's going to happen, and we are much more optimistic than that. I think this is going to be a very quick, probably painful bear market, but the midterms are coming up. This country is being red-pilled. I think we all see that happening, right? Even those that are classically traditional Democrats, they don't like what's happening. They see what's happening. A southern border that's wide open, right? Just awful decisions being made from our commander-in-chief day in, day out about how to best protect this country and how to move it forward. And those things aren't happening. And the average person feels this. But I think it's bigger than that. This red pilling is happening all over the world. And so our view is that we're going to come out of this bear market, and that with the midterms coming up, it's going to be a Republican landslide, a real avalanche, and that we are going to continue to take this country back. And that we are we have a new book coming out called The Big Bribe, where we walk you through the game plan we see going forward, which will produce one of the biggest melt-ups, similar to .com, right? Similar to .com, that 5-year melt-up where the NASDAQ rose 575%, about 115% average gain per year. We're going to have that kind of a melt-up from now until 2027. That's our game plan. Look, my prediction's as good as yours. No one knows what the future holds. But as we walk you through in the book, we believe there's a lot of direct evidence that points to this outcome. So what we've got to do now is survive the bear market that we've now entered. We are in a bear market. It's painful. They're just the opposite of bull markets. They work just the opposite. So, instead of buying the dips, you want to sell the rips. And bear market rallies, by the way, are fierce. They're much bigger and happen much faster than even in bull markets. So there's a lot of opportunity to make money, but you also want to be very nimble. Now, we're not turning people into day traders here. That's not what we do, okay? But we have a game plan and a strategy. Okay, so I'm going to now talk about what we're launching here, which is Parabolic Options. One last thing I'm going to talk about, because everyone's asking us about inflation. Inflation is not running at 8 to 12%, right? That's what the government statistics tell us, right? We know better than that. It's not an 8% CPI and a 12% PPI. Inflation, and this is what we're all up against, folks, trying to beat a bear market and beat inflation. That's what we're doing here. Think about where the last time inflation was where it is now. Inflation legitimately today is 15 to 20%. It just is. Everything costs more. There's things we must buy. Food, right? Energy. All of the things that we have to buy every day. So inflation, the wealthy can withstand it. It's the poor and the middle class, especially the poor, that get hit the hardest. But it takes a toll on the economy, which is why we just had a negative print for the first quarter, which shocked everybody. So we're likely going into a recession. The Fed's problem is they are trapped. They're trapped because they know inflation is higher than 8 to 12%. They know it's 15 to 20% plus. So what are they supposed to do? They can't do what Paul Volcker did. If you remember, in 1981, Paul Volcker, when inflation was 15%, so inflation today is just as bad as it was then. Paul Volcker took the Fed funds rate to 20%. Inflation was 15%. He took the Fed funds rate to 20% to choke inflation and to kill it in its tracks. And he did that and then produced the Reagan Revolution. Does anyone see Jay Powell and his merry band of central bank money printers? Does anyone see Jay Powell and team hiking rates to where they must be to choke off inflation today? Talking about 5, 10% plus for the Fed funds rate. We're at 1/4 to 1/2% now. So no, that's not going to happen. So they're trying to jawbone it down. That's not going to work. we're going to have persistent inflation until something changes. And that's probably going to mean a dramatically slowing economy. That's what the stock market is telling you right now. So that's what we're dealing with. We believe that this market is going to go through a period of sell-offs with big bear market rallies, and that after the midterms, we're going to have a major move higher, because that's what the cycles tell you. That's what the seasonality tells you as well. We've got a lot of other reasons to be bullish long-term as well. Again, that's all spelled out in our new book coming out soon. But as far as parabolic options, again, this is the launch of Parabolic Options program number 16. 16 programs. They last 4 months in duration. And, we act on our signals, VR investing system signals. So we only give you the highest probability signals. Going back, all the back testing, over the time, these 15 programs we've had before, 83% of our buy signals produce a gain of between 20 and 30% minimum. So our signals are really good that we act on. And because this is now a bear market, we're changing our approach a little bit. We're making this program available at the lowest price we've ever offered. We're going to be a little bit shorter term in our holding period. So instead of holding, we normally hold our puts and calls about 12 days. That's the average holding period. That's going to change now. It's going to be a little bit shorter lived. We're going to take quicker profits and book more of them. So we'll walk you through all of it. Look, we in this inflationary period we're in this bear market, there are still things that work. And that's what we'll be using in parabolic options. We only buy puts and calls. We don't do straddles or spreads or anything complicated. It's like buying and selling a stock. We walk you through how to do it. We tell you exactly what to do. We set it up in advance so there's no surprises. And again, the areas that work in an inflationary environment like this, that's what we'll be using in parabolic options. Those are precious metals and miners, energy and energy stocks. The groups that are most susceptible on the upside to the benefits of inflation, where they benefit from it. Because we are in a global commodity super cycle. That's not just Kip Herriage saying it. It's not just Tyler Herriage saying it. This is Goldman Sachs is saying this. JP Morgan is saying this. We've only had a handful of these over the last 100 years. They tend to last 5 years, 5 to 6 years on average. We're only in year 2 now. So we believe oil prices are headed a lot higher. Gold and silver prices headed a lot higher. Mining stocks, energy stocks are really going to soar. And these are the areas we'll be using for parabolic options to really use leverage to take advantage of inflation and to take advantage of the bear market. So folks, come and check it out. Again, it's great to be able to speak with you again today. Hope you're all doing well. We look forward to the opportunity of working with you. If you have any questions, let us know. All the details should be right there in your email on the launch of Parabolic Options number 16. We hope you'll come join us. And again, have a great day. We'll see you soon.